question today is, what is PMI? Private Mortgage Insurance. Typically, when a bank does not get 20% down on a home mortgage, they're going to put PMI in place. Is that going to benefit you, me, as the consumer, as the borrower? No, it's going to benefit the bank. So I am with Dr. Frank Smith today. He's with JBA Financial Management, and we're going to be discussing PMI today. How can we help homeowners figure out, can we get rid of this? Can we not get rid of this? Do we need it? Take it away.
You can get rid of it, actually, at some point in time, and you would want to when you could. It's pretty interesting. You hit on a very valid point. The only person who really benefits from PMI is the bank. It's meant to be a backup to your not paying off on the mortgage. So you're paying for this private insurance for it out there. It's interesting, I looked up the number of loans in America they have is about 42%. So
42% of people
still
that have a mortgage
still have PMI.
And should they?
If they can get away with it, no. And we'll explain why in a second. You know, the VA loans, the FHA won't have it. But basically, I found another thing I thought was interesting. The lower the down payment you put and the lower your credit rating, the higher they will charge you. So PMI is not the same for everybody. And they can really get you good on it. Adjustable rate loans, it would be higher. And of course, how high is high? That's the question they ask. Typically, like I said, the banks want you to have 20% equity in it. So that's what they're looking for out there. It is basically a large moneymaker for the mortgage companies. That's and it protects the banks. That's the game that's kind of being played. And interesting, it runs about 1 to 2% many times of the value of properties, which can be $250 to $500,000 or $500 a month on a $600,000 house.
Yeah. So you have a mortgage. You're paying your principal. You're paying the interest. You're paying insurance. You're paying taxes. And you're paying for the bank to be protected.
Yep.
And you know, I have seen payments as high as $200 to $500. You know, in addition to the mortgage, the insurance, you know, all of that. And so you add that to your payment. That's a significant amount.
Yeah, that's kind of interesting. You said added to the payment. It's embedded in the payment. It's embedded. And people don't see it, and that's why they don't realize it could really be part of out there. So anyway, when it drops below that you have 20% ownership of the house, when an 80% loan drops below out there.
Okay, hold on right there. So if I take out a loan and I put 20% down, I'm not going to have
Correct.
PMI. However, a lot of loans right now are 5 and 10% down, and so you will have PMI.
Exactly, and the only way they're going to drop it, there are rules that have been passed that say what the bank should be coming to you from time to time, but the reality is they're going to drop it when you request it. And so the question then becomes, when should you request it? You know, they're going to make sure you're current on your loan payments and things like that out there. But basically, many areas like here, northern Colorado, we've had significant gains in the value of homes. Right. As well, when we had low interest rates like we did, the payment is made up of part interest to the bank and part that pays off the principal. So you have two things working for you. Right. You're paying down the principal on one side, and the value of the property is rising on the other. When you look at paying down principal about 3% a year, 2 to 3%, which we were in lower interest rate times, and you looked at about 3% overall rise in value of real estate through time, it takes about 3 years on a lot of properties. You know, it doesn't take that many years out there, 3.5 years, before you actually have 20% equity. Most people don't even realize it.
So if you have had your home for 3 to 5 years, I'd definitely be checking to make sure that the value of the home
it's risen enough that you own 20% of it outright.
You own 20% of it
relative to what you owe the bank.
Yes,
that's correct.
That is correct.
So anyway, but this can be a large amount of money. I try to let people know that. So just as a reference point for how much, you know, $500 a month could be, if you could make just your 3 or 4% interest like you do on your mortgage over the life of your mortgage, that's $35,000. You can save yourself $35,000 in today money if you can get that PMI dropped. You really want to do something like that if you can. So the question then is, how do you go about doing it? You actually need to typically hire somebody who will appraise your home.
Right.
And the appraisal may cost you, I did this, it cost me $350.
It's significantly more now.
Yeah, but the whole point of it is if you're saving $400 or $500 a month, you're gonna break even on that in about 2 months.
Yeah.
And all those future months that you've been paying it, they're not telling you, you
Yeah.
would get it in your pocket.
Yeah, you're looking at $600 to $700 for an appraisal now. But in the long run, that is definitely worth getting rid of that PMI insurance, which could be $300 to $500.
Do you want to hear an interesting fact?
I would love to.
Most people don't put $300 to $500 a month in their retirement plan.
Yeah.
I mean, this is saving you money. You could put it in a retirement plan that would be worth hundreds of thousands of dollars down the road. It's really something you guys need to get rid of if you can.
Okay, so let's do this. If you have a home that you've had for 3 to 5 years, call me. I am going to help you find an appraiser who can evaluate your home and see what the value of the home is versus what you owe on it. If that's a 20% difference,
Yep, we'll agree with that.
then we're going to be able to get rid of your PMI insurance, so you'll be able to invest that money with Frank.
There you
here.
go. Yep.
So it's going to help you, it's going to help me, and it's going to help him too.
Yep. It really is a good deal. It's something you need to get rid of if you can. And in this region of the country, I bet there are thousands of homeowners who can do it that don't even realize it.
Yeah, I totally agree.
It's
Well,
great
thank
language,
you
yeah.
for that information.
Yes,
I
ma'am.
hope all of you take advantage of that and call me, because that $650, it's gonna save you so much money.
Mm-hmm.
So, if you have any other financial needs, Dr. Frank Smith here would love to be able to help you out. And our information is listed below.
Yep.
So until the next video, we will see you next time.
Thanks for your time.
You're welcome.